I wanted to share with you some of the trends that we're seeing through our office as the Bank of Canada has just changed their overnight lending rate. And remember, when the Bank of Canada changes its overnight lending rate, it has a direct impact on your variable rate mortgages, on your credit cards or your lines of credit, but it doesn't necessarily have a direct impact on fixed rate mortgages because fixed rate mortgages are priced off of the bond market. Consequently, we are seeing the bond yields come down too. So we are starting to see some really good interest rates, both from a variable and a fixed rate mortgage. Just to kind of give you a sense of what's happening in our office, I'd say less than 5% of our clients are choosing variable rate mortgages, but we are starting to get a lot more inquiries about variable rate mortgages. So again, just some ideas for you to help you get ahead and pay off your debt quicker and pay off your mortgages quicker. So one trend that we're seeing at our office right now is we're getting clients calling us who are in the middle of their 5-year term, but they have some credit card or line of credit debt. And they're wondering, I've got a really good interest rate on my mortgage. It's at 3 or less than 3%, but I've got all of this other credit card and line of credit debt, and it's bogging me down. It's kind of affecting it's affecting me personally and mentally, but it's also impacting my cash flow in my family. So I'm just feeling like I'm using my line of credit to pay off the credit card, and then I'm just getting further and further into debt. So one of the great things about some of the good interest rates that we're seeing right now is we can consolidate that debt into the mortgage, and sometimes there might not even be a penalty to pay. Because if we go to the existing mortgage lender that you have, they may be open to consolidating that debt. I'll tell you, and many times they are not. So often we do have to go to another lender. But what we'll do is we'll run the calculations for you to see if, in fact, that helps you get ahead. So if you are in a situation where you're in the middle of a 5-year term and you're like, I wish I could just get rid of some of this debt or get a better interest rate on this debt and consolidate it into one payment. That's a very common trend that we're seeing at our office right now. If you are a client of ours, we have contacted you about a mortgage renewal, and we're really proactive with our clients. We're contacting them 6 months before their mortgages come up for renewal. One of the questions that I keep getting is, well, what happens if interest rates are better when my mortgage comes up for renewal, and I've already locked in an interest rate? Our process here at our office is we always like to get some updated information from you because 5 years ago, you were a lot different person than you are right now financially. So we'll always get some updated information from you by way of a mortgage application. We are a sophisticated office that uses good and easy technology to collect your information in a secure way. And then once we have your application, and we can also contact your existing mortgage lender for a renewal. If you already have a renewal notice, that would be great for us, for you to share with us as a baseline. And then we just follow interest rates for you. And as they are going down, we lock in those rates. So even you'll get the best rate available on the market, and because we're managing that process for you and for all of our clients whom we have updated mortgage application information. So that's another trend that we're seeing in our office. And last is if you are a business owner, because that is one of our specialties, is helping business owners. Because as a business owner myself, I am frustrated sometimes with my own bank because we've got a good, profitable business, but it is tricky accessing equity in a home or some of your homes when you are a business owner, because what you show on paper may not necessarily be you might still have a great business that's profitable and sustainable, but what you show on your personal tax returns is a lot lower than what your business is actually generating in revenue. And that's often the case from an income tax point of view. Your accountant might show low taxable income on your personal tax return. So, business owners, we are here to help you. We have lots of clients within our client list who are business owners that might have outstanding Revenue Canada debt. We can help you pay that off. That is very expensive debt. I also, if you want to reinvest in your business, that is a great way to use the equity in your home. So I've also included some information below on just sort of tips and trends that we're seeing right now with interest rates. So we love helping people. If you are a client of ours, please reach out and we will reach out to you too. Thank you. Have a great day.